Yeah, yeah.
So,
I think they're
Joe,
live.
your
Okay.
venture, we
Yeah.
call
Yeah.
it as Vyasa
Visa, Visa.
Visa. Okay. All right. Just to get the pronunciation correct. Yeah.
So I think we're live. Maybe we'll wait another couple of minutes for more people to join in.
Cool.
Meanwhile, I think, I have a boring presentation, so maybe I can start doing that. And then maybe I'll quickly run through the agenda once more people join
Veda,
in.
we have Amit, Dr. Manish, who you know, and then Joe from Visa. Veda is my partner at India.
Veda, lovely meeting you.
Hi
Hello,
everyone,
Veda.
nice to meet
Hi.
you.
Likewise.
For this
Team,
session,
can
no, I'm
we?
Satish Andra.
No, oh, sorry. I don't know why. Yeah.
So, team, can we put on the presentation so that we can just kickstart, and then probably while I end that, I'll talk about the flow of the session when more people join in. Ankit, Dev. Okay, I have to present. Okay, well, just give me one moment. Okay. Good. So just very quickly, I think, whereas the overall objective is to sort of inspire our founders largely to look at deep tech as not just an India story, and to sort of build an understanding where they can build storylines that are that cross borders actually, and for which we've invited the set of speakers that we have today, Satish, Joe, uh, to really talk about how India has built and supported companies that have gone beyond just the India, and how they help their founders on some of those aspects of storytelling and connecting and speaking with the other rest of the founders. Similarly, Jo has built a brand which is cross borders, and she'll run through her journey and some other case studies through her presentation. And Dr. Devan will talk about how BIRAC is gluing this whole biotech bioeconomy space in India very silently in a very subtle way, and have been doing this. BIRAC has been doing this over the last probably 2 decades. Uh, might have gone unnoticed with a lot of people, but they have done a lot in this space. So probably Dr. Devan can talk about that. So I very quickly wanted to run through, where we are at currently in deep tech, and it's very important for everyone to understand. When we say biotech is a part of deep tech, and biotech and life sciences is a part of deep tech, it's very important to understand that it's still just the. I mean, we're just probably scratching the surface. If you look at the data, AI still accounts for majority of the funding within deep tech, and this has to change. This has to change because, and this will change. This is bound to change because if you look at the bottom of my slide, you can look at the signals and the policy push and the capital push that we're getting from the government of India. 1 lakh crore is coming from the RDIF, and there's another additional coming in from SIDBI FFS 2.0, and a lot of capital is coming in the country for deep tech, and this will be going back building some of these Indian startups, through funds like India and so many more who've been around for a while. I know India also has been like more than 12, 14 years in the industry. So there are so many more mature deep tech funds also in the country who will be building this pipeline of deep tech in India, and biotech will be a major push thanks to BIRAC and Dr. Divan, who've been championing this segment. So this is just an overall sort of where we stand at. If we go and take a deep dive into specifically biotech, I think this is where the overall industry stands, and this does not signify in any ways the startup aspect as such. But definitely there is a lot of push as we can look at whatever BIRAC has been doing, whether it is through BioE3 policy, whether it is to the 2,000 crore that BIRAC is now going to be disbursing to second level fund managers through the RDIF that they've received, and the THSTF facilities that they have in place, where a lot of founders, as we speak, are doing globally competitive research work, and will be presenting those probably companies will be building those products, and building those products from India for the world. So there's a capital that is coming in. There's a policy that's already supporting the biotech revolution. And as the data and the numbers also speak, we are definitely going to see a lot of surge in biotech investments and biotech founders in the country. Very quickly, before I run back to the main agenda, I would also like to take this opportunity to tell everyone that IVCA is hosting its first Bharat Deep Tech Summit on the 8th of October in Bangalore. And biotech will be a big focus definitely there. And since anyways, IVCA has had the opportunity of working closely with Dr. Diwan, BIRAC, through Dr. Diwan's guidance, we've also worked with the Honorable Minister, Dr. Jiten Singh, with the Secretary, and the whole sort of TDB, everyone. So we will be doing this Bharat Deep Tech Summit, where definitely biotech is going to be one big focus, but we are also going to be covering other 4 or 5 major themes. And just sharing this for all of our audience, and for all of you, Satish, Joe, and Dr. Devan, that we would really want your support. And yeah, I would just park it here now, and quickly, in the interest of time, introduce our flow and the next set of speakers. So after this, I'll very quickly give it to Dr. Devan for sharing some of his insights and point of views. Post which we have a session from India by Satish and Veda, and then we will give it to Joe for the founder, because so we wanted to sort of park that thought about sharing the founder journey directly coming from the horse's mouth, so that all of our founders that are on the link, and the ones that will be attending this post when we will be posting it on social media and YouTube, everywhere else, they can really get a feel of all of this information coming directly from a founder. And as we were just chatting up before offline, before we went live, Joe interestingly is very passionate about everything Bharat, startups, and also is has learned it the hard way, as a founder, about storytelling. So I'm sure we'll see that when she's presenting. So without further ado, I'll now like to invite you, Dr. Divan, so that you can share some context, post which we can move to the investor session, and after that over to Joe. So over to you, Dr. Divan.
Thank you, Amit. Greatly appreciate IVCA's engagement, which is the right body to help us in this journey. On behalf of BIRAC, I welcome all the startups investors who have joined. Thank you, Satish, bringing in the investors' point of view, and Joe, the hands-on journey of a startup who has been able to successfully convince people to believe in the story of a founder and participate as an investor as well as a customer. So I think thanks, Veda, for joining us. So as the objective of this activity was that, as Amit was mentioning, DBT BioRec have been supporting the deep tech bio innovation space for a very long time now. And typically, what we see is our founders are technical experts, and they have done PhDs, postdocs. So they're very well equipped technically, and they are also committed to solve a new problem, bringing innovations for the societal good. And in that journey, they acquire many different facets, new facets in their life. Like they become the CEOs of a new company, a venture business, talking to different people. Most of them, the deep tech founders, are typically first generation entrepreneurs. I think that fact remains largely unnoticed, but that is where the struggle is, that how to win the other people's conviction in what they believe. So that includes resource generation to get their technical know-how, reach to a proof of concept, and then they deliver to a larger segment. And people who have commercial bent of mind, and they are looking at IRRs, return on investments, business expansions, etc. That's the investor pool. And then there is a large customer side for deployment. So all that territory is new, largely for most of them. And in between is the kind of translation that speaking your mind out so that the other person believes in your story and becomes part of your mandate, the journey, as well as the larger mission to bring that solution to existence and get deployed in the market. So this particular gap we get to see, which is a deep gap in the biotech sector, and all the deep tech innovations typically share similar stories. We are taking close to about 100 plus top deep tech innovations from India across different sectors, including biotech, under the championship of Ministry of Education. And this pool has been populated from across the country, across 13 themes. Most of the IITs are involved here. Department of Biotechnology and BIRAC are involved to steer the biotech domain. So in this call, as well as this recorded webinar, would also be available to all of them. So I'm sure, like with Satish's insight from an investor's point of view and Joe's guidance from a founder's perspective, how our deep tech startups should be able to position their proposition to international stakeholders. So maybe the lingo, the storytelling, the art of kind of relating to their point of views, while so I think all that, even I'm very excited to learn that and get more insight. So I would stop here, and I think we should give more airtime to both these champions. Back to you, Amit. Looking forward to an interesting session. Thank you.
Thank you. Thank you very much, Dr. Divan. Like I said, now we'll move to Satish and Veda from India. Interestingly, just to give everyone a background, Satish had done a presentation on a similar topic, actually. Just the difference was that that room was filled with a lot of emerging managers, emerging fund managers, and first-time fund managers. And it was a very well received session that Satish did. So which is why, we specifically reached out to him to sort of pivot the topic, for a founder's lens as well, inspiring them to sort of actually think about TAM beyond borders. And like Satish mentioned earlier, that, whereas Satish will be talking about the overall story, we also have Veda from India, who leads biotech practices within India, to take us through some of those story. So over to you, Satish and Veda, to take this forward. Thank you.
No, thank you. Thanks, Amit. Will somebody change these slides, or how do we? Yeah. Anyway, good afternoon, everyone. I'm assuming majority of you are absolutely signing from India. Thanks, Amit, and thanks, Dr. Manish. Hello, Joe, for this opportunity. I think what we're going to do is talk a little bit about, I call it a playbook, right? I think to some extent, sometimes you have references, on how to do it, because others have done it and, codified the best practices. And for many others, there are no references. That means you have to write that first playbook. But in India, we all know, I think India has done really well in IT services or BPO services, pharma services, all of that in late 90s and early 2000s. And then India has done well in internet, e-commerce, direct to consumer, edtech, fintech, all of those sectors, targeting largely local opportunities. But I think around 2016, 2017, this whole India to global product movement started. And of course, now, there are lots of tailwinds. I think two significant events, around the world have created that momentum for all of us. So we're all very lucky, in that sense. COVID absolutely, reconfigured the supply chains. And so what happened then is every nation started looking for business continuity plan, not just individuals and corporates. So from that perspective, they all started doing some of the local sourcing. That's how they started looking for technologies, from obviously their neighborhoods. The second most important, I would say, factor, creating this tailwind is the current geopolitical situation, right? So we all know about the tariffs, the immigration crackdown, all of that. So every nation wants sovereign independence. So hence, obviously, they're all strengthening, their focus where they want to have almost zero dependence, right, on others out there, because at any time you could be on an embargo list, in which case, you lose control, right? So from that perspective, there are a lot of programs, right? Policy programs, capital. I think Amit talked about RDI innovation, fund of fund two, then specific sector specific funds, AI, semiconductors, biotech, cybersecurity. All of these are available now. And policies are, of course, very entrepreneur friendly. And markets I talked about have been created by these tailwinds, right? So post COVID and the current geopolitical situation. So for any entrepreneur, if you have the talent, and you dream big, you may build out here in India, then you go regional, and then you go global, or you may build from India for the globe right from day one. That's a choice you make depending on the problem you're solving and the customer value proposition, the competitive landscape out there. And so, for all of these entrepreneurs who have tremendous talent, now you have a market, policy is friendly, and there is capital available. So now nobody can complain that, oh my God, people don't get this at all, or the ecosystem has not evolved enough, right? So what I want to talk about here, and my partner Veda will talk about specific examples, like two examples. Let's go back to the previous slide. I think the next slide. Yeah, here. So I think everybody needs to do assessment, right? And I'll give you some examples in our companies. There are a few companies where they get $2-3 million first check, and we tell them do nothing in India. When you build it in India, and then you're absolutely targeting US, and don't waste your time, selling in India market or even the regional market. Whereas other set of companies, we tell them, you build it out here, do some pilots, go maybe to Southeast Asia, bake it more, and then go to US or Europe at a later date. Or a few others, we say, listen, your first $50 million of revenue can come from India and the regional markets. For the 50 to 200, you need to go global. So it is very different for each company. And you don't do this just for valuation or just to be investor friendly or attract investor interest. You do it because that is the opportunity that is available for you. So, what kind of filters do you apply? So that's why I say it's a very early stage thesis. It's not like a reaction at a much later stage. So, what kind of filters do you apply? How do you make the decisions? And then once you make those decisions, what do you need to do to build a very viable business? In all of these, my, suggestion, recommendation to entrepreneurs is like ignore valuations, ignore funding, ignore, IRRs, MOICs, all of those will happen as long as you solve the problem, you solve it in a very unique way, you got IP protected, you've looked at freedom to operate kind of boundaries, and then you found a business model that'll help you, build a business, right? And once that happens, absolutely, you all get the valuation and the investor interest, and you create value and monetize value. We go to the next slide. Yeah. Largely what we've seen is, right, from an investor lens, what investors look for is like previously, the domestic markets are small, and sometimes you don't have, I would say, visionary buyers, right, or early adopters. Maybe the domestic buyers will buy when the market becomes mainstream. right? We all know the early adopters, and then you go mainstream, and then the laggards kind of join. We all know about that curve. So clearly, when investors ask you this question, are you globally relevant? I think in their mind, what they're looking at is, hey, you're unlocking the global market opportunity. The TAM becomes much much bigger. Otherwise, if you're only focused on India opportunities, yes, for vaccines and within biotech space, sometimes even medical devices, you will have a specific TAM, but then when you go regional, that increases. When you go global, that increases significantly. So, from an investor point of view, also they look from exit, right? Eventually, 7 years or 9 years or 10 years later, when you perform well, your exit can happen through an IPO. I think only 10% of the companies do IPO. A lot of exits happen through secondary, which means growth investors come and buy the early investors, or you get acquired by a strategic partner. But like I said in the very beginning, you are not building to either sell or IPO or do a secondary. You're building to solve the problem, and that's the entrepreneurial mindset. But do keep in mind, why a specific investor asked me this question about regional or global, and you need to be prepared, to be able to answer that question, and that becomes very, very important. We go to the next slide. Yeah. So also the triggers that demand geographic expansion, like we talked about TAM, I think I don't want to repeat what I said. Fundraising, definitely growth investors would want to see, a larger story, right? Because early stage investors have some math, then Series A, Series B, and growth investors have a different kind of math. And in our own portfolio, we've seen multiple of our founders, many of our founders relocate to US, majority of them to US. But I do see in the next 10 years, there's going to be a significant US plus one strategy. You're going to see some founders relocate to Southeast Asia, Europe. A few of them might end up in Middle East. And all these markets become very, very important. In our own case, for example, Steradian, since it was a global company, it's a semiconductor company, given the deep tech context, was acquired by Renesas from Japan. And Shield Square was a cybersecurity company. It was acquired by Radware from Israel that was publicly trading on NASDAQ. So your takeaways are, market expansion, additional pool of investors, potentially exit opportunities. That's the value prop. But for you, are you credible enough if you're going global, right, to compete with the Israeli company, a Silicon Valley company, Cambridge company? Your competition is not anymore, local, right? It's global. And a lot of us many times talk about, oh, I'm doing this from India, I'm doing it at 1/10 of the cost. And there's a lot of talent in India. That's a story that's often told and repeatedly, right? And investors don't get excited by that. So what? If you're going to save 50 cents on a dollar, that's interesting. But I think the key you want to talk about is, listen, with the expertise that's available, sometimes applying the fail fast, fail cheap methodology, I'm able to innovate much faster, much, much quicker than anybody else out there, and then compete with the global players to grab their attention or to win against them, and get the analyst recognition, file the patents. That's what you have to obviously look for. We go to the next slide. Yeah. So anyway, deep tech, I've listed here semiconductors, biotech, absolutely. They all have regional, global relevance. B2B, AI is absolutely, has significant relevance. Some of the consumer brands, it's very difficult. I think cultural nuances in each of the regions and regulatory. Like for example, take India fintech. You can't go global. I mean, it's very difficult. Of course, even within biotech and all, you have different regulators, right? You've got FDA in the US, CE marking somewhere else. You've got on in India's regulatory framework, CDSO or whatever. So clearly, where there's heavy regulation, sometimes prevents you. But that said, if you're able to address that from the very beginning, it's not going to be very difficult. But what travels, in a very frictionless fashion and easily is kind of well understood, and that's where there are some playbooks. So you, as an entrepreneur, you could go to some investors who have had these journeys. Like, for example, I'm sure Joe will talk to you about her own journey, and she could be a great role model, right, for many other aspiring entrepreneurs, who are planning this global expansion kind of stuff. So that's the filter, in terms of what are the filters you apply. Tech-driven solutions with universal value propositions, and lighter on the regulatory stuff, travel regionally and globally. We go to the next slide. Yeah. So when is it the right time, for you to start thinking about going global? Absolutely. Like I said, we have one company, and I talked about it. They're doing like, an agentic AI, software for chip design, right? So just with the first $5 million raise, they're completely global from day one. They're doing very little, within India. They're developing the product. Team is based here, but they're looking at Japan. They're looking at US. But these guys have a lot of domain expertise. I mean, they've spent 20 odd years in the sector. They've 80 odd patents. They've been successful previously, built a company, sold a company, understand the startup journey. So clearly, they know it. But for someone else, who's doing this for the first time, ideally you may want to bring in somebody into your co-founder team, right? If US becomes extremely important, or Europe or Japan or any of these markets, build that kind of an advisory board, have access to some of the consultants, maybe get some of the angels from those regions. So that's the way to approach once you make a decision. But very few companies, except large industrial houses and established companies, but from a startup perspective, if you're looking at post Series C kind of a thing, which means like typically you have 30, 40 million in revenue and you've raised, maybe 30, 40 million dollars. Not easy, the markets get very crowded and the category leaders from each of those local geographies. Not an easy thing for people to kind of change their DNA and go compete at that point of time. So typically, once you achieve a product market fit, depending on, the vertical where you're playing and the kind of, expertise and experience you have from your previous roles, it's like Series A, pre-Series A onwards till Series B would be a sweet spot. I mean, there are always outliers on both sides, but generally this is kind of the sweet spot. We move to the next slide. Yeah. So again, this is all driven by GDP. This is all driven by, people's understanding of technology and how much they're willing to pay. I'm talking about deep tech here. I'm not talking so much about consumer or e-commerce or ed tech here. US, Europe, highest value, highest cost, right? So go there if your product fit is real, you have all the local certifications, you understand, and you can speak the local lingo, and you understand the culture. That becomes extremely important. Southeast Asia, similar economic similarities, but a little less early friction, but also you don't get paid a whole lot. And I'll tell you, what we have experienced. And GCC is like, okay, because of the diaspora, there's high trust, capital availability, definitely a low-hanging fruit. But what we have seen is like if you're able to derive a dollar, selling locally, you could probably get like around $2, $2.50 from Southeast Asia for the same product or service. And then you may get three and a half from GCC, but you're definitely getting $7 to $10 from Europe or US. I mean, that's kind of what we have seen, right? So your margins, if you have good margins, I mean, typically deep tech, unless you're in hardware or more of integration than IP driven, then your gross margins are not that attractive. But otherwise, if you are an IP driven product or service, typically your margins are very, very good. You're talking about upwards of 70%. And now, if the pricing factor also changes, then you're going to build an amazing business, right? So what you look at is like regulatory fit. Is there existing demand? Is it mature, or do we need to educate? And without rebuilding, sometimes, okay, certification layer is fine. I have to go get FDA. There's a very different process compared to CE, right, within Europe. But if I have to go create demand for my product in US, forget it. Unless you have lots of capital, and it's not possible, right? Same thing, in terms of, I have to rebuild the whole product. If it's going to be the outer layer that I need to change, but if I have to go to the guts and change everything, that's an experiment for which you do not have a lot of capital, and that's very risky as well. So this is kind of, other set of filters, the critical questions that you ask yourself to decide, which markets to focus on at what point of time. We go to the next slide. Great. I think, now I'll pass it on to Veda. I think, Veda, you may want to talk about two examples here, assuming, majority of our audience are from biotech life sciences space. Certainly, please talk about SIGTUPLE and iStem. So I'm going to pass it on to Veda now, and we can go to the next slide. We'll skip this because this is from the software world. Yeah. We'll pause here. Yeah, Veda, all yours.
Sure, sure. Thanks, Satish. So I think before I get into the couple of examples from our portfolio itself, I think I'd like to say that when taking, a biotech story from India overseas, uh, in addition to speaking about the quality of the team, the product, the IP, the regulatory readiness, the international regulatory readiness, I think it also becomes important to make the audience from overseas aware of the changes that have happened in the Indian ecosystem. So while the product and the team may be equivalent to what may be being developed somewhere elsewhere in the world, there are some preconceived notions about India which have gradually, and some may argue even drastically, changed in the last 15 years or so, thanks to the seeding that's been done by BIRAC and also other ecosystem development, the maturation of the ecosystem that's happened. So I think it becomes important to make the audience aware of what's transpired, right? So there is many more biotech startups that exist today than did about 15 years ago. There are a few that have reached a phase 2 stage. There is clinical proof of concept that's been achieved. If you look at the AbbVie deal, I think that's proof that IP developed in India can command global valuations. There are inherent advantages of developing in India. You get, 4, 5, 6 shots on goal versus one if you develop overseas, inherently because of the cost of development and now the regulatory speed that is gradually changing. So these advantages, I think, have to be highlighted, that can strengthen the story and make it more compelling for especially investors overseas to look at assets from India more favorably. And then the other thing to say is we should also focus on what advantages are inherent to India. So coming back to SIGTUPLE, I think they started very early developing a solution with AI to automate microscopy. Um, while there were, constraints in India, like data was noisy, there was absence of data. So digital data had to be created in pathology. There were constraints in terms of, infrastructure and pathologists. They were able to leverage this kind of noisy data to develop superior AI modules that could be deployed anywhere in the world. And the solution that was developed here was able to achieve FDA approval and can be deployed globally, and it becomes relevant globally in any market where pathologist availability is limited. So I think that's the kind of story that companies should try to build. What you build in India can be deployed globally and at a cost. If it's relevant for India, that can be relevant in overseas markets like Africa and Southeast Asia as well. If you could move to the next page.
Yeah, so just one thing I want to add here, Veda, is very clearly, I think every member of your team, right? I think you're talking about robotics, optics, and then AI on one side. Then you're talking about data, you're talking about domain. I think it's very important to have like a world-class team. And I've already talked about, yes, sometimes you will have limitations. You have to identify the gaps and then you have to bridge those gaps, right? Either through advisors, either through consultants, and potentially through angels. And they're all available there. I think please don't think that, oh, I have a very limited reach and it's not easy for me to really punch above my weight. I think an entrepreneur, who's fearless, whose vision and whose dreams big can do it. I just want to emphasize that point. It's extremely important, especially for people going global. Yeah. I think this is again, from fintech, we can skip this. Maybe you won't talk about iSTEM piece also. Yeah.
Yeah. So I think iSTEM, is a very prominent story in the history of biotech in India. Stellar team, I think advisors from across the world, which lend a lot of credibility to the team. And I think what they've also done smartly is used academic institutions across the world to tap into the right expertise, which instantly lends credibility. And now they're one of the topmost assets, in the ARMD space, cell therapies for ARMD. They're one of the top three in the world. And of course, the inherent advantages of developing from India at a much lower cost and much faster speed, given the ability to recruit patients in India is almost 10x what you can achieve overseas. I think all of those factors make the story very strong, and they're very close to achieving a significant milestone. Anything you would add, Satish?
Yeah, so I think, to double click, I think the educational institutions were from US and India and, different parts of the world. But also while they didn't go and approach each of the markets, early on, while they're doing their kind of trials, animal trials or whatever, they were in different geographies as well, Singapore, Australia, exploring everything. Finally, while they may do their kind of phase 2 studies in US and go for an FDA, all of that. So having that certainly understanding, a very, very nuanced understanding of your ecosystem where there are centers of excellence that matters becomes very, very important. Also, I think publications become very important for many of the deep tech companies apart from applying patents. So how do you demonstrate your thought leadership? How do you get invitation at the table? Primarily, if you are world class. So very clearly presenting papers in international symposiums outside of just applying patents. It's extremely important, in terms of rub your shoulders with people, who are well recognized, both in the research world and the practitioner world, translational research to create these products and services. So I think these are some of the things that, again, these companies have done well, and those are the ones that get translated into playbooks for many people to look at and say, okay, which of these are relevant for me and what do I do kind of next. And at a certain point in time, I'm pretty sure for very relevant audience, Dr. Manish can always organize a story, like just like Visa, a Siktapal story or an iSTEM story, Dr. Manish. I think that'll be very, very valuable. Yeah? Go ahead, Veda. I think you may want to just go through this final piece. Yeah. Slide. Can you see the slide?
Yeah, I can. I think, any overseas investor would look at a company the same way as we do here, right? The criteria don't necessarily change. Like I said, the architecture or the IP in this case, in case of biotech or deep tech, is that valid in another geography? Economics, of course, and this is one thing that's particularly relevant to biotech. We think about the science, the IP and the science and the product and the regulatory, but not early enough about how it will get manufactured and scaled and then go through the reimbursement process if we are targeting overseas market. So the viability, the commercial viability of and the launchability of the product in any market that we target becomes important to consider early on, to have a thought process while it gets action much later. And then why are you better off developing this in India, or what is the specific advantage of developing this from India versus anywhere else, right? So I think communicating those three things make it very attractive early on for investors to come in, and of course down the line as well. And you expect your VC partners or other investors that come on board to help you with various aspects where there might be gaps in the team. So if the R&D is strong and you need help thinking through regulatory and commercial, either there should be expertise within the VC or they should be able to tap into their network, and that should be criteria for you to look at the right investor that you want to partner with. Similarly, for distribution, our learning has been, in medtech especially, distribution partnerships are extremely crucial, especially overseas, but also in India. So look for an investor who would have those connections and have that kind of a network.
Yeah. No, thank you. Amit, yeah. So that's pretty much it, Amit, unless there are any questions.
Sure. Thank you. Thank you so much, Veda. Thank you very much, Satish. I think, again, it was very enriching from the point of view and the experience that you both were drawing, and some of the case studies definitely will help all of our founders and other attendees online, and the others that we'll be circulating this with. So I think maybe if there are any questions, we can take them up towards the end. But thank you again, Satish and Veda, for the wonderful insights that you shared. And without further ado, I'll give it to you, Joe, to take us through your presentation. Thank you again, Satish and Veda.
Thank you. Thanks, Amit. Okay, hi everyone. This is I don't know if any of you have heard about WISA, but am I visible? Sorry.
Yeah, we can hear you.
You are visible.
Joe.
The rest of
Yeah,
us.
and we can see the presentation also. Yes.
Okay, awesome.
Right.
So I just wanted to introduce, first of all, the journey. The idea is to talk you through the backstory. So I'll show you a bunch of slides of where we are today. I founded WISA with my co-founder and husband as a side project, something that was just designed to hold space for me. And it was in a time when chatbots were considered to be IVR, and a time when AI was something that I had one investor tell me that ऐसी चीजें तो MIT, स्टैनफोर्ड में होती हैं, ये आप लोग क्या करोगे? Later, actually, out of Stanford came our biggest competitor who just last year folded up. So we're still out there. I'm not an AI person. I'm not even a psychologist. I'm just somebody with lived experience of depression, but somebody who's a product person who knows how to build. So I build things. So I started building this. Just to say that, there'll be a lot of naysayers. There'll be a lot of people who don't believe in you. Hold on to your vision of what you think reality could be. Don't rely on people's validation. Be very comfortable with failure. I think what held me together for 10 years, it was a hard 10 years. Today, AI's biggest use case is mental health. And I have an interview later today with ABC, the American Broadcasting Corporation, who's like recording me in London because I'm here right now, just to ask me why I built this 10 years ago. It's a very bizarre experience, which I just want to share with you, that all this can happen. This can also happen kind of presentation. So whatever anybody tells you, whoever believes in you doesn't believe in you, just enjoy the journey. That's really what this presentation is about. And I'm speaking, of course, to the founders. I know that majority of you are VCs in the room, but this is a founder presentation to founders. Could we go to the next slide, please? So we built WISA 10 years ago, but interestingly, our main mission, my mission, was to fail at solving global mental health. It came out of my own depression, and having been tech for good and trying to solve big global problems and thinking that no matter what I do, I'm going to fail. And then I said, if I'm guaranteed to fail, what am I willing to fail at? And the idea was that I'll fail at solving global mental health. Let me aim big. And one thing I had learned was I wanted to solve it actually for adolescent girls in rural India. But I went out. And I went out because I'd learned I was 42 when I was founding. So I'd learned already that to be taken seriously in the global south, you have to be taken seriously in the global north first. So we just built it as a global direct to consumer AI for mental health product. Started with the UK NHS, which often people start with. That is lots of pathways for adoption. They're very, very hard to make money. Went on to the US, very, very hard to break into, lots of money to be made, but oh man, it's a nightmare. And a lot of other places, Singapore, South Africa, it was pull based. So because you start being active in the UK, there's a network from effect from the UK where a lot of other organizations then meet you, you speak, you're a part of ecosystems, and then these all came in. It was a very tiny startup. I mean, we're not one of, I remember Sick Tuple was coming up when we were coming up, and they were like the really everybody's darling, and we were the ones who barely 1 2 VCs would say yes to, and then jo mila chalo leke aage niklo kind of startup, because who does AI and who does mental health out of India in 2017, right? Like this is not a great story. But can we go to the next slide, please? So this is our journey. So we started out go live with direct to consumer. Um, our breakout moment happened during COVID, because that's when mental health became something that everybody started looking at.
Yeah.
We had just before that one paying customer in a employer setting. And during COVID, valuations just rose. Everybody was going towards digital health, etc. But you also had a post-COVID crash. So in our space, AI and mental health, 10 years has been very informative. Uh, you had everybody thinking that you're useless. Some woman somewhere has some random idea, and okay, we believe in founder. Okay, we believe in idea. Mental health is big for us. We're maybe people would invest in us because they'd use the product and they'd change their mind about what was possible, and then we'd find these believer investors, which is actually a really good set of investors to have. People who believe in the idea that India can build out, people who believe in you or people who believe in the mission. Because most investor cycles are what, 5 7 years, and we're now around for 10. So most of our investors have had to write to their LPs and say that it's going to take a little longer. And you want those investors behind you. You want the ones where it's still fun to do the journey in the space of time that a biotech cycle takes. So post-COVID, there was this real hype in the market. And then pair therapeutics, which was the big daddy of our space, AI and mental health space, had become big in the US. Uh, uh, Everybody wanted to be acquired by Pair. We were talking to them about acquisition. We were making our pathway. A whole path of everyone was, this is a $4 billion company already, and they're AI in mental health. They're not AI, they're digital therapeutic for mental health. We'll be the AI that they will acquire. This is the whole plan. Pair Therapeutics got sold for parts for $6 million post-COVID. There was a digital health crisis in the market. So this is the thing that, your VCs will tell you to ride waves, right? They will push you towards where everybody is pushing you. You're there for the long run. You have to figure out who you're going to be after the crash also. So follow what the market is saying, because that's what the VCs are there to tell you. What is the market saying? But build something that is resilient to market forces. And that's, I think, the one thing that we did very well. So when the market was doing well, our VCs would tell us, spend more, You are the only company we tell to spend more. Please don't say you want to be profitable. That's a bad word to VCs. That used to happen in 2017. I'm talking to you VCs also now. That used to happen in 2018, 2019. We were told that no, um, you know, if you say you want to be profitable, it's a really bad idea. Then post COVID, everybody was like, now please tell that original story of yours. Say that you want to be profitable. For us, Ramakant and I, we had been founders in the dot-com era. So the reason we were able to do this uh, our own way was just because we'd seen this whole hype and we'd seen the crash. And we were like, we're not here to build a startup. We're here to solve global mental health. We want to be alive when everybody else vanishes. So we kept our costs low. We kept our focus tight. And when people said, no, do diabetes also, do this also, we were like, no, we're going to be number one in mental health. I think that belief is going to carry you. Uh, to be very clear what you want to do. And when the market forces go here or there, just say, I'm going to do this. And who's your validation? And I'll talk about that as our biggest lesson. You are not getting any validation from even providers. Eventually, your validation is your outcomes. Your validation is your customer, end user, your patient. So, did your you went in to solve a health issue? Did it actually solve that health issue? After that, you talk about providers and did that solve it? So around this time, we began to understand that we had amazing outcomes. I'm still at, evidence and outcomes 2023. We started publishing very much. So we wouldn't get a lot of revenue, but we were still getting our FDA breakthrough device designation. A lot of research interest in WISA had happened. So we were publishing, I think, 30, 40 papers in a matter of 2 years, both internally and externally, running RCTs all over the world. Didn't spend money on it. It actually became a net margin line. Like we would get money as a part of grants. So grant funding became a way of covering our costs of what so we were able to stay light on costs and we were producing a lot of evidence. Um, and that I think is a very cool hack to be able to start looking at the evidence that you have to produce and looking at the interests and ecosystems of people who are researching this. So creating an ecosystem of researchers who are interested in you. We know our own story. There are amazing number of people who are interested in us, and then we understand what our story is. So finding those people or letting them find you and putting yourself out there enough that people can find you is really what I learned. That, I would have a story, but eventually somebody else would tell me my story. And I just needed to be there, visible for people to find me. Um, we began to understand how to get insurer employer adoption very late, around 2023, through partnerships. For a company out of India, getting the right partners is hard, but that is often the only way. We weren't great at hiring US sales forces or UK sales forces. We spent as much time hiring them, then trying to make them work, then firing them. We would have probably spent $5 million less if we hadn't gone through all of those cycles. What eventually worked was this partnership approach or advisor approach and founder sales. But what also worked for us was because the rest of our market was dying, there were assets to be acquired. So on stock swap, we ended up, because we were very good with our cash flow management. And that's the thing. Nobody cares about your cash flow management, even as an investor story. But what's amazing in cash flow management is that you're alive when other people are dying. Then you can buy those assets for a stock swap because you have the cash to be able to help them. And that's become our play. We realized that we were selling tech to an industry that is only interested in revenue. So most healthcare providers, they just don't have time in the US to think about outcomes. You can have everything, right? We had all the outcomes in the world. We had all the solution in the world, but you go there trying to sell, it costs a hell of a lot of money to sell to a US provider system. So what we ended up doing was we said, okay, we are going to sell services, not tech. And if we're going to sell, say, behavioral health services, which all of them need, we're going to build a tech inside those services and we'll acquire these tech enabled services companies and build our tech in. Now, when we go to sell, we are selling them revenue. We're not a cost item. We say, we're going to take this problem of mental health off your hands, plus, we're going to give you net revenue on this. And that is growing rapidly. And our tech is just powering our margins rather than trying to sell it to somebody to power their margins. And our ability to manage our cash flow has become our biggest strength, but not in a way that I would have imagined at all in 2017. So it's been a very interesting journey. Um, I'm just going to, these are all, you can read all the slides. I think the one number that is not here, that is I'm very passionate about, is that from a direct to consumer business, which was not a part of the story ever, 500, but it was impact. 500 people wrote to us till date to say that they're only alive because they kept, that they used Wiser. And that had nothing to do with our success as a business. That had everything to do in dark times for Ramakant and my willingness to keep going as a business. And our success as a business is entirely due to the fact that we were able to keep going. Because there were so many times in this journey that we would have given anything to be able to just pack up and go. And then one more person would say, I'm alive because I did this. And that's what kept us going. I'm just saying, as a founder, the journey is very different. You have other options. You could do this, you could not do this. Your journey is going to take some 10 years of resilience. And maybe that resilience is going to be the difference of what makes you succeed and others don't. If you could go to the next slide, please. So these are some of Wobot Health. This is a consumer insights report, a CB Insights, sorry. Which was very interesting for us. So these are all global organizations. We, of course, won all of these awards, but this is the 9.6 on 10 for us because CB Insights is what the VCs rate. And Wobot Health was founded by a Stanford group with funding from, or about 40% ownership from Andrew Nung, who's Coursera and all of that. So you have this very big San Francisco Bay Area royalty coming together to found our biggest competitor. And we were bigger on CB Insights than them. They have actually just folded up. Their investors pulled out. The interesting thing of having those investors who are true believers and having a good cash flow management is that those waves that come in, which make everybody rise fast and give them amazing valuations, they always had a tenth of our revenue um, and less of everything, except they were bigger in media and they were about 3x of our valuation. Let that go. Valuation is not validation. Um, what really counts is whether you're running a good business. And if you're running a good business, the investors will also come and go. You are on your own journey and you will get there. You're building here with bigger constraints and a good idea of what the most difficult environment is going to look like. As long as you adapt to each environment you go to, you already have bigger strengths than some of the biggest names who you'll be competing with. Could I go to the next slide, please? Now, I'm just going to tell a bit of our story. This is um, this is how this is where we are in terms of storytelling. So when we tell our story to VCs, we talk about, this is how TCV grew, this is how annual revenue grew. Why? Because the revenue base is actually very small. So you want to tell a story wherever your story becomes strong. You want to say, this is where we did it, and this is what our growth is. Now, many of you will be pre-revenue right now, but this is for times when you're early. This growth rate is a really good way of spinning that low actual number. And then there are these words called TCV, ARR. These are very useful words. We tend to say invoiced revenue. So instead, I would say total contracted value. which often can be very big. So you go into a US healthcare or somewhere else, they will contract you for a big thing and then give you a tiny pilot. So you can do a large total contracted value, or you have a multi-year grant like a Welcome Trust grant. Its total contracted value is $7 million, but we get $1 million every year because it's a multi-year grant. So a total contracted value can be shown as a very big number. When we're talking and telling ourselves as the biggest we can be, I like to call it being a puffer fish. So there are times when you might be a little fish, but like a puffer fish, you have to just inflate yourself a little bit and be the biggest you are, because you're trying to scare away your competition. You're trying to attract the right kind of interest. There are times when you have to look tiny. So you have to be capable of puffer fishing. You don't have to become somebody else. You just have to be able to inflate and deflate as the room requires you to be. Could we go to the next slide, please? Um, Now we have a lot of different businesses. That's because in order to stay alive, we ended up doing whatever it took to make money. And that sometimes we wish we hadn't done, but I don't know that I would have done it differently. So it's a complicated one. Right now, there are parts of this business that we just did because, those were the clients who were coming to us. So some which really helped. So if you're in health, and if everything is in health, so public health very often becomes an easier in, because you meet them at conferences, you meet them through research partners, and then public health, you'll find a champion and they will start adopting you. Um, Sitting and Googling doesn't help this. You have to get physically out there and you have to find your ecosystems. And I'll walk you through how to find those ecosystems. US healthcare reimbursement took us years, I think 4 or 5 years of iteration. It could not happen. We finally acquired our way into it. And sometimes as a business who's dying, that just for a stock swap, you can acquire. What really helped us with these acquisitions was, one, that we had cash flow. So we had money in the bank that we weren't using at a pace that these businesses were using. And two, that there is the story of an India IPO, which the US IPO takes a long time to happen. You have to be very big. So we were like, you investors, you sell your business to us, it's dying anyway. And you can potentially have an India IPO with us. And that story actually worked because our Indian investors were part Indian, part global. And but a lot of that came from the investors we had, which were Boston based. And that's the other thing, that who invests in you forms a large part of who has a stake in your growth and their networks. So the biggest thing that we need to build, and I'm talking to BIRAC here, um, we need to build this India-US sectoral investor ecosystem. People who are big in Boston and Bay Area, and by the way, Dallas, lots of money there, haven't had a it doesn't figure when people talk about it. But right now, when we are going to the next stage, we are finding it so much easier to look at Texas. There's so many family offices, so much money there. There's such a big Indian population. Health tech in the US is, you find an Indian in every room. So, one thing that we really need to do as a country is build this VC ecosystem where our Indian VCs and an international VC or international funding group is has been activated, because those guys who are big in health tech in the US ecosystem should be putting money in funds that are then investing in our biotech startups, so that they have a stake in giving them pilots. Why can't we have effectively like a United Healthcare sandbox, which is a VC, which will, take people in, and then that's how you get pilots in the US? Why can't we have an equivalent of that with Indian founders who are Indian origin founders in the US? Like, let's try to dream a little big in how we look at this capital, because all of this comes from that. The one that helped us the most in this was W Health, which was not the biggest fund, but because it was Wadhwani AI, and Sunil Wadhwani is in the US, and W Health's founder was in the US, but had a real stake in getting Indian companies to go in the US. And therefore, they had that ecosystem. The rest of our founders, much bigger, much more big names, including Google, who put in a small stake, no stake in actually having us succeed. Could we move forward, please? Yeah, just move forward, please, from this. This is just some more storytelling. This is again ways of telling the story. um, when when the regulatory environment looks at you, then AI has a very high regulatory environment. So what Satish talked about in all the filters, we are bad for all of those filters. Still, we went global, right? Regulatory environment not favorable. Um, uh, we are product fit not clear because people don't want to pay for us. Um, all of the issues were there. We had to reinvent our product in order to do things. But again, mission to solve global mental health, founder refusing to give up. We did all of that. Could we move forward, please? Again, regulatory environment. These are how we talk to. So we might have a VC story, but we have to be best in class. So what we ended up doing is we would have BBC do an expose on us because we were working with the NHS. And this was not even talking about us because we are in India. And by the way, the world does not like the fact that you're based in India because it feels like, oh, you're compromising quality for cost. So this was just, oh, AI is bad because AI was such a threat to everybody in the mental health space. Even back then, right now, even more so. We get an expose every other month right now. But but to handle it, we just said we're going to have more certifications than anybody else in the world. And we just went aggressively high on how do you make sure clinical safety is happened, and we became the number one in that. And that became actually the biggest selling point that we have today in a post Gen AI world. Could we go forward? Yeah, these are a lot of these are research partners. So, Hospital for Special Surgery, NIHR, Columbia. A lot of these started out as research partner, UCSF. They sound really great. You mix up the people who are actually giving you business with the people who are just research partners, people who are doing pilots with you, all of that. But we get to a slide that is this impressive. That then makes us pufferfish. So this is a pufferfish slide. Um, could we move on? So this is going to be a very candid meeting. This is another way of telling the story. So what you do is you take one patient's journey, ideally a patient. So you might not have a lot of patients, but you have one patient within one clinical healthcare system that is very representative of what your audience wants to hear. And then you talk about their story. This was a patient that actually NPR interviewed, and we found out about it. So we took it from that, but we recast that story in with the talking points that we wanted. So this was the just a patient story about how she used Visa and how it helped her. But we then turned it into her behavioral healthcare manager. Then she got this, then this happened, etc. So we told the story that the provider would want to hear, and we said it's been featured on NPR. So again, making us look a lot bigger than what we would have without. We didn't spend any money doing this. We picked a story and we retold it, but it looked as if we had like a big. We are people who are really, really big. Can can we move forward, please? These are other types of storytelling. So this is an NIH R01 grant that we got with Washington University at St. Louis. WashU at St. Louis applied for the grant. We didn't apply for the grant. We just partnered with them because they wanted a platform to do the research on. But the research was on our platform. So we own all of those outcomes and that data. We use that same research and some other internal research to get an FDA breakthrough device designation. So all of this combination was actually zero cost to us. In fact, it contributed to our margin. And that's, I think, the big learning that you can achieve all of these things by just being a part of the right ecosystem. WashU at St. Louis, when they first came to us to say, oh, can we do some research on you? We were super nervous that, would we actually, they're independent, they'll find out that it's not good and they'll publish anyway, then what happens? So in that ecosystem, many of your researchers, your research ecosystem has value. Use that, do partnerships with people who are natives of the ecosystem you're going in. And in collaboration, apply for grants. These are things that many of you know how to do. Start there, then leverage those ecosystem to go to their people. That's what I would say. This is what worked for us also. WashU at St. Louis had somebody who was whose mentor was at hospital at special surgery. She then said, "This is amazing." To that mentor. That mentor was one of the biggest people in the space, and that person then helped us get into that hospital. Those are the things that work. The money we spent on salespeople was a waste. Could we move on, please? This is again an incubator that came out of, so a lot of our opportunities came from incubators. So Travelers came out of an incubator for InsurTech in Hartford. And with that, they did a 1.5 years randomized control trial. Now, this doesn't give us money. This was maybe $50,000 of revenue and 1.5 years of very intense work. But this data to say that we can actually change how long somebody stays off work after an injury was why we got all of our other insurance clients after. So it's a very patient work. And it is something that VCs were struggling to understand why and when it would happen. Because there was just no, I don't blame them. There's just nobody else in our space doing what we're doing. And very often when you're doing deep tech, that's what happens. But this part was very, very valuable. So doing Travelers was really valuable. What really kept it going, though, was that as a part of doing this, you find some people who really believe in you and they tell you how to tell your story. So Travelers told us how to tell our story. We didn't know that this was the case. They told us, oh, this is what we want to prove. This is how we're going to do it. And we just went along for the ride. By the end of it, we could tell it to any other investor, any other person as well. Could you go on as well? And then similarly in the NHS. So it took us many, many years to figure out how to tell the NHS story. We would say that, how many people are improving symptoms. That was the easy one. How to say that they have achieved clinical recovery standards. But really, to be able to tell this NHS story in the US, we needed to be able to, could you move forward, please? We needed to actually be able to cast it in terms of cost saved. Because what travels between the UK and the US is how much money did I save? How much did my wait list reduce? So you have to, each market has its own um, opportunities and its own language. So UK has its own language, its own metrics that it's targeting. US, if you're selling to an insurer, it has one metrics. If you're selling to a provider, he has another metrics. And if you're selling to value-based care, very much like the UK, we would sell to a provider something which actually in the UK's lowering cost was a great thing. Lowering cost was not a great thing for a provider in the US because the higher the cost, the higher they could bill. So you really need to co-design like a local entrepreneur. So you have to co-design with the people what your proposition is with the people in that market. So end of it, all I'm trying to say is that what works? You can't throw money at this. You can't throw Google research at this. You can't talk to ChatGPT and or Claude or whatever else, and all of those things help. But what really, really helps is becoming insiders. And you become an insider by being a part of the tribe. You become an insider by being friends with people. You don't have to reinvent who you are. You don't have to suddenly become an MBA type person, etc. Find people you connect to who have done a little more than you, who believe in you, who like you. Find that real connection. And you might find that from the research communities, but go broader from just a little adjacent. So go into an accelerator, go into environments where people fall in love with you, the human being, with your passion for your work, with some idea about your business, and then listen. Listen to them, have high challability, like Zakir Khan says, get into the car and then don't ask where it's going for a bit. And just go along with it. And then ask them, why are you so interested in me? And maybe they'll They'll tell you your story in a way that you then learn how to tell your story. Don't do it with agenda. Everybody that you meet shouldn't be somebody that you have agenda in. Last thing I'd say is to get people to believe in you, go to people without authority. So people with authority, like people like VCs, etc., who have money to give you, there's always an agenda. So they have these filters. They have only so much time to give people that they actually are going to put money in. But if I wanted to get to a stakeholder, I would go to people with authority over them. So I'd go to a grant funder and ask them for connections with a startup or with a fundee. I would not go to them and ask them for money. I would go to a research organizations uh, and ask them for connections with their mentors. Um, so the connections that you're asking are within a system without an agenda, who's just sharing an idea. And because they're also passionate about the same thing, those things actually play to your strengths. And in this journey, lasting as long as you have to, you can't be somebody else. You have to play to your strengths and be you. Thank you.
Thank you very much, Joe. I think, just like me, everyone else would also be having goosebumps, and we really felt your energy and your vibe coming all the way from across the borders on building beyond the borders. So I think it was a really wonderful session, and I'm sure there will be a lot of questions that will come up eventually, and some of them are here on the screen for all of you. So maybe very quickly we'll run into the questions, and then probably from there just quick closing remarks from Dr. Devan. So I think one question, I think it's largely, I think, for Joe and Satish is. TAM is often the sticking point. Global investors feel in India-sized TAMs are too small. How should founders frame and expand their TAM narrative convincingly without it, feeling inflated? So Joe and Satish, if you'd like to go in any order.
No, so Amit, I already spoke about it. Just inflating India only time, it's not possible. I think people will get to you, right? So you have to do both top-down and bottom-up analysis of what the market opportunity is. That's the whole reason why when local markets only can get you to certain critical mass, you have to have the ways of accessing regional or global markets. And that's what they look for. And that's why many global investors, unless there are certain sectors that grow non-linearly. They don't invest, right? They don't write the first check. They wait for the companies to evolve, and so they get a thorough understanding of both the product maturity and the opportunity size before they write the check. So justifying it for the sake of justifying is very, very difficult, and people do figure that out.
Got it. A follow-up question, Satish. When you evaluate an Indian deep tech startup for global scalability, what is the first thing you look for?
I think early stage where we write checks, there are three risks, right? And so there's team and execution risk. Two is the product risk, and three is market risk. So we look at all those three and then figure out, I think, over a period of time. Most of our team members, Amit, are either engineers or doctors within the investments team. And all of us are operators. That means we have run startups before we moved to the other side of the table. In Silicon Valley, India, we worked in operator roles. So from that viewpoint, again, we don't try to run the car from the back seat. It's the entrepreneur's dream. Entrepreneur has to run the car. We're there more as co-pilots or the Sherpas in their journey. But that said, market risk is something we're willing to take. So we look at the team and the execution risk and then the product risk. Since we're very domain centric, that's the reason why we're able to assess better. And clearly, like I said earlier, look for people who are credible, right? Globally, who have, this is a B2B type of a play, mostly in deep tech. Very few people do consumer stuff, if you're doing real deep tech. And again, deep tech itself is a question. What is deep tech, right? We can debate just like what is a social enterprise. So clearly, I think these people would have domain expertise. Like take case of iStem founder CEO, someone like Jogin. Oh, he spent a lot of time in the industry, right? So he's gone through those journeys. It's not that we hold that against the entrepreneurial team, but very important, can they, on a global platform, are they credible? I mean, do they have the domain understanding, not just local, but global markets if they're going after global markets? So those are things that we look for, that everything that, Joe talked about a little bit, except about the VCs, I agree. So, yeah,
Yeah,
Can I just jump in here? Sorry.
yeah, sure, sure.
Um,
please.
just wanted to say these questions, right? So we're deep tech, so let's go a little more tech. And I'm AI, so I'll bring AI here. Um, what I've been doing while this thing was going on, and I'll share it with you guys, is creating a skill for Claude. So a lot of these things now in how we mentor our startups, um, I'd been building a skill, and then when the question on TAM came up, I said, to this skill, add helping them be able to reframe their TAM. So what that does at the end of this session, I will send you guys a coaching. I call it Joe Coach because I've created a coach for myself and other people I coach. And then I added onto it this use case. But you'll be able to use that and you can add on to it, just update the skill to be able to help me do this or help my startups do this. And then Claude will just give you that skill.md file. You upload it into Claude. And then every time you ask Claude a question, on how do I tell my TAM, etc., it will actually do it in a correct way. So I would suggest that we take universal expertise in this from what all everywhere exists and the questions that we're getting from panels like this and give it into a skill that every startup can use so that they can feel more confident.
Thank you, Joe. And I think Satish also mentioned the same thing that he's sort of as a past founder, they also like getting in the car without knowing where it's going to go ahead. I mean, once they've done their initial diligence, that is. I think there's another question for you, Joe. Uh, yeah, how did you approach fundraising from international investors while building a company from India? Any specific, maybe one thing that you'd like to call out? Even though you did mention some of those while through your session.
Yeah, we did. We got a lot of introductions. That was not a problem. We weren't. This was 2015, where everybody wanted engagement, which turned out to be the reason why social media killed mental health in the world. And because we were a mental health startup, we were not willing to chase those numbers. We were also not getting those numbers. To be fair, we were not, the most addictive app. So it was hard to sell internationally. Um, it uh, it seemed like the India Out story was selling in India. The India Out story was not selling internationally. I think not having being in the US and not having a US investor did hurt us. Um, UK doesn't matter too much. So you can go into the UK and all the rest of it. But the US healthcare ecosystem opens up. It's very shared interest based. It's very like, I know you and therefore I will help your company. So I would suggest that the best way to do it is to go to accelerators and like people like all of the big payers and all of the big farmers have their sandbox ventures, these kind of arms. Those are the ones that are easiest for people to get into from India.
Thank you. Thank you, Joe. I think there are a couple of questions for you, Dr. Diwan. One of them is how can VCs engage better with BIRAC for true biosciences and biotech startups, especially given the noise around TDB, RDEF, and a lot of that noise is led by AI, semicon, robotics. Somewhere bio themes are lurking in the background.
Uh, I think for the biotech sector, BIRAC has received the specific mandate to support the deep tech innovations through the RDIF fund. So it is like a concentrated, high quality pipeline that gets exposed if VCs come and partner with us. And the RDIF can only bring 50% of investment in the total project cost. So the remaining 50% has to be sourced in by the founder through public funds, using the public opportunities, including the VC investments, etc. So that is a natural alliance and collaboration that can come in, and this way we can de-risk the 50% co-investment. The terms and conditions are very, very enabling. Collateral-free loans at 2 to 3%. We play largely a subordinate role to the lead investor. And so the idea is that the venture or the startup can grow and create a value for itself as well as for the country. And in turn, the investors also gain through their growth. So I think it's a win-win for both.
Got it. And I think I'm sure you get this question a lot, Dr. Diwan, but how can founders best position themselves for BIRAC's co-investment and grant support to accelerate international expansion?
So I think there are two arms of BIRAC now. One is the core BIRAC, which does the basic entrepreneurship development, initial seeding of startups at the very early stage. So that is being done, which has been done conventionally through BIRAC. The BIRAC RDIF is a separate division which can write checks up to 5 crore to 200 crore as towards the 50% fund requirement. So for this, the mandate is that the innovation must be deep tech, TRL 4 and upwards. The innovation should be of higher delta change value. It need not it The incremental innovations are not supported. We also support projects which are manufacturing centric that can enhance India's resilience and for import substitution and self capacities, both for tech sovereignty as well as indigenous value creation. So all of them are high ROI and high value propositions that get supported. And one primary requirement is that the startup must be headquartered and controlled by Indian resident citizen, 51% ownership. Here's one interesting example, Amit, I would like to share. For deep tech startups, for example, and many unicorns cases, we have seen people flipping over, and for the sake of raising capital, etc., which is a relevant approach. But I think in the deep tech side, we have seen companies who are developing new drugs, who have registered overseas, but for phase 2, phase 3 clinical trial, they want to utilize the India's ecosystem again. And now there's a conflict. The company is no longer an Indian company, quote unquote. So all the funding excess like RDIF and etc., other things uh, become non-practical for them. So I think use that kind of approach little strategically what works in your favor while taking the no decision. Thanks.
Yeah, thank you, Dr. Diwan. I think a couple of questions for you, Joe. Maybe I just combine them in a way that, one question is that in sort of generally speaking, how to have that sort of vision to scale globally and build markets, for your product outside of India. This is from a founder building in a stealth mode, and the other one is more specific as to the kind of product that specifically Visa was building. How did you build trust with the users across cultures, especially when mental health is still heavily stigmatized, including in India?
Um, sorry, the first question was?
So the first question was from a stealth startup as to how founders can have a vision to scale globally. I mean, like penetrating Singapore and other global regions, and what are the challenges?
Yeah, it wasn't even, when I started, it wasn't that I want to sell to Singapore, right? I just wanted to be global. I wanted to connect with the whole world. It included like Lithuania and Lesotho, and you know, I used to say Lithuania, Lesotho, and London. Like it should help everybody because mental health is a universal issue. Um, and how can you actually solve that? In fact, people like Cure AI, who are doing really great work on tuberculosis, a lot of their funding comes from grants, and they work on a lot of their work is in Africa. So I think going global for many things, if you have a mission and you're trying to do it in healthcare, what is a country? I mean, you're trying to solve for humankind, right? Like you're trying to actually solve that problem that people are facing. Uh, and that was the extent of my mission. In fact, the biggest stretch of how you had that vision is probably what we're doing now, which is we're working in places like Meghalaya, in rural Maharashtra, trying to actually solve for the person I was at 16, trying to solve for a rural adolescent girl. Uh, so you go to everybody, and that is translating to indigenous communities in America also. So they want something for their indigenous communities. It's also translating for Africa. Um, I don't know. You can't tell a founder how to have a vision. I mean, that's literally what they start their company with.
Yeah, absolutely. Thank you, Joe. I think probably another last question is coming from Manoj. And earlier we also had Manish asking about BIRAC. But Dr. Devan, this question is probably, I have to go Arnab style. The nation wants to know where is BIRAC in terms of selecting the process for the second level fund managers. I think this is probably the highlight of the day.
Yeah, I think there are two aspects to that. I think the second level fund manager selection is being done by ANRF, not by BIRAC, under the RDIF. With regards to the direct support to industry and startups, that is where BIRAC RDIF is. So we had our first call opened from 13th February and it closed on 31st of March. We received close to 200 applications. So we have started their evaluation on in the order of date of submission on our portal. So we have already conducted 4 investment committee meetings, and there are few candidates who have already been selected, and term sheets have been issued. So we'll make that public once we have the executions done and in uh, a short amount of time. And rest of the applications are also under evaluation. So will come back and announce it publicly and on our website soon.
Sure. Thank you, Dr. Devan. Manoj, I just twisted your question for a little bit of, entertainment as well. Whereas I think Dr. Devan, answered the question that you had in mind around startups and entities. So with that, I think, it's a wrap. Thank you very, very much, everyone, for spending your valuable time. Thank you, Dr. Devan, for, initiating this and we'll definitely circulate it widely the recording as well. It's been a wonderful session. Thanks to Satish Veda for sharing how the founders should actually look to build in this space and build beyond India also in mind, having the essentials in place. Thanks to Joe for adding that founder energy, which which really I think took to the next level and definitely, thank you so much for taking out time. We understand that you're traveling, and like you mentioned, you have another interview lined up today. So all the best for that as well. So thank you very much, everyone. Looking forward to staying in touch, and we'll keep you posted on some of the other similar sessions that we are doing at IVCA. Thank you.
Thank
Thank you.
you. Bye-bye.